My name's Rylin Bailey. I'm the VP Investor Relations for Equinox Gold. I've been with the company since 2016. And I'm looking forward to spending the next 10 minutes telling you how we're creating the premier America's gold producer and why I think Equinox Gold is the most compelling investment opportunity in the gold market today. All right, so of course my lawyers would yell at me if I didn't tell you that we're going to be making a number of forward-looking statements today, so please do visit our website, SEDAR and EDGAR, to read the rest of our continuous disclosure documents. So like I said, I joined Equinox Gold in 2016. I was employee number 6 in the company. At the time, we had about $10 million in the bank, and we owned one gold mine in Brazil that was on care and maintenance. Since then, we have literally been the fastest growing gold company in the world. We wanted to build a gold company quickly. We did our first acquisition in March of 2017 when we merged with JDL Gold, but things really started to kick into high gear at the end of 2017. That's when Ross Beatty, who is currently our chairman and our largest shareholder, joined us. Ross had recently sold his green energy company. He wanted to reinvest that money in gold because he thought gold was going to start to run. Gold at the time was about $1,200 an ounce, and Ross wanted us to build the company quickly while gold assets and gold equities were still cheap. So we've done a lot of M&A over the year, but we've also basically built this company from the ground up. So our first M&A that we did was in 2018 when we acquired the Mesquite mine in California, our first producing mine. In 2019, we built our first mine, so we built Aurizona in Brazil. At the beginning of 2020, we acquired Lea Gold, and that was really a transformative acquisition for our company. It gave us 4 producing mines and a development stage asset, and it really kicked us into high gear from sort of a single asset developer to a solid mid-tier producer. At the end of 2020, we built our second mine, Castle Mountain in California, and then in early 2021, we acquired Premier Gold, and that gave us another producing mine in Mexico and some interesting exploration properties, but most importantly, it gave us the Greenstone gold mine in Ontario, and that's the mine that we're building right now. And it is going to be absolutely transformative for our company when it comes into production in the first half of 2024. At the end of 2022, we built our third mine, that's Santa Luz in Brazil, and now we're building our fourth mine, as I mentioned, Greenstone in Ontario. So in its first 5 years, Equinox Gold has grown from a single asset developer to a diversified gold producer, and we've got a clear path to produce more than 1 million ounces of gold over the next few years by advancing our pipeline of development stage assets. So it's been a really, really busy 5 years. It's never been dull, and all of that growth has built into production growth that you can see in these rising blue bar here, and also reserve growth. So our reserves have grown from less than 1 million ounces in 2018 to more than 17 million ounces of gold today. Our production has grown from 20,000 ounces in 2018 to around 600,000 ounces today. But we're only halfway through our target. You can see from the light blue chart on the right hand here that we want to be growing to over 1 million ounces over the next few years, and we are well on our way to do that with Greenstone, Castle Mountain, Los Filos, and the Aurizona expansions. But despite all that growth, despite the fact that we're going to go from 600,000 to 1 million ounces in the next few years, we're trading at the bottom of our peer group. So you can see on the right-hand side here that we've got one of the largest reserve bases with 17 million ounces. You can see from the second chart to the right that we've got one of the strongest production growth profiles. We're going to double our production over the next few years, yet we're trading at the bottom of the pile on the left-hand side here. And there's a few reasons for that. We certainly did have some operational issues last year, which are hopefully behind us. But the biggest reason is because the market doesn't value growth right now. The market wants cash flow today. It's not valuing growth in the future. But if you're one of those investors who has a vision and you've got a longer term plan and you can see the production growth that's built into this company, that's the investment opportunity for you. You basically get to buy tomorrow's 1 million ounce a year gold producer at today's discounted pricing. And our job right now is to deliver that growth. So every time we advance one of our development stage assets, get Greenstone into production, Castle Mountain, Los Filos, Aurizona, every time we increase our production, we're reducing that development stage risk, we're increasing our cash flow, we're reducing our costs, and all of those things are positives for the company, and we will gradually start to claw our way back up this valuation chart until hopefully in a few years we're trading at the top of this pile as a premier America's gold producer. That's our target. Our share price has jumped quite a bit, about $1 actually, in the last few weeks, just because the gold price has started to move, which is fantastic. Higher gold prices means, of course, higher cash flow from our 7 producing mines, but we can't control the gold price. We have to make sure that we're delivering value on the ground by advancing our projects, and that's the best ways for us to build value for our shareholders. And the biggest bang for your buck is going to be coming in just sort of 12 to 15 months from now. So when our Greenstone project's in production in the first half of 2024, that is absolutely going to be the best value add that we can do for our shareholders. So we bought this project in April of 2021. We're advancing it in a joint venture with a company called Orion Mine Finance, who have been fantastic partners for us. It's doing really, really well. We started construction in October of 2021. We just announced a couple of weeks ago that we're 66% through construction, so 2/3 of the way. It's doing really well. It's on track. It's on budget. But the reason our share price is discounted is because the market doesn't believe us that it's on time and on budget, and that's because probably the last 10 mines that have been built in Ontario have all had problems. And there's 2 other mines that are being built right now. They've both had spectacular blowouts over the last year. Their budgets have doubled. They've got schedule overruns. And basically every time one of those projects announces a negative press release, their stock trades down and we trade down with them. So the market is skeptical that we can deliver this project on time. We are very confident that we can, and that is our absolute focus for the next 12 months, is that make sure that we continue with progress at Greenstone, and every quarter when we put out a press release and say it's still on time, it's still on budget, you should start to see that progress valued into our share price. I invite you to follow along with progress. We put photos up on our website every week, and this is absolutely going to be I can't even begin to explain how transformative this project's going to be for our company. When it's in production in 2024, it's going to be bringing another 240,000 ounces of production to us every year, and it's very low-cost production. So even if you consider that all of the inflation prices stay where they are, we have seen them start to soften a bit, but even if you think that diesel and cyanide and all of those cost inputs stay at these higher prices, we still expect Greenstone to come in with all-in sustaining costs around $850 an ounce. So in just over 12 months, we're going to be having 240,000 extra ounces of production. It's going to increase our production, increase our cash flow, decrease our all-in sustaining costs. Huge reputational boost for the company, obviously, if we can do it on time and on budget. And that is the revaluation potential that's coming for you just short 12 months from now. And then, of course, once Greenstone's in production, now we're self-funding, because right when we think that Greenstone is in production, that's about the time that we expect to get our permits for Castle Mountain, our expansion that we want to build in California. So Greenstone cash flow is going to pay for the Castle Mountain build. That's going to add another 200,000 ounces of low-cost production to our portfolio. We're advancing an expansion at our Aurizona mine in Brazil, so it's going to double the mine life down there, bring in more production, lower cost. And we'd also like to do a big 100,000 ounce expansion at our Los Filos mine in Mexico. So, and as we advance all of those projects, our production goes up, the risk goes down, our costs go down, and all of that is incredibly beneficial for the company and hopefully is valued into our share price for our shareholders. And the important thing to remember is that all of that growth is already built into our stock. So we've done a lot of M&A over the last 5 years. All of that's behind us now. We have the projects in place, and we have the plan in place that we need to double our production over the next few years. And every time we build one of those projects, every time we deliver it on time and on budget, our production goes up, our costs come down, the risks come down, and all of that should be valued into our share price. And that is the investment opportunity with Equinox Gold. That's how we're going to take the company from the left-hand side of the chart, where we're trading at half of our peer group, to the right-hand side of this chart, where we're trading as the premier America's gold producer, 1 million ounces of production. We'll be paying a nice chunky dividend to our shareholders by then, and that is our objective over the next few years. I was going to walk you through our operating mines. We've got 2 mines in California, 1 in Mexico, 4 producing mines in Brazil. Those are certainly the bread and butter of our company today, but the really exciting opportunity, the growth that's going to be coming, the investment opportunity is from the growth that's built into our portfolio. You're all going to ask me, are you funded to deliver that? We absolutely are. We've got about $200 million in the bank, $130 million in our revolver that we can draw, another $100 million credit facility. We've got $275 million of equity investments that we can sell if we need to. So we've got the financing in place that we need to deliver Greenstone into production. And once we're done that, so 4 or 5 years from now, we're going to have a nice solid 1 million ounce a year producer divided quite evenly between the US, Canada, Mexico, and Brazil. We'll be paying a big dividend to our shareholders, and we'll be a nice, profitable, sustainable premier America's gold producer, which is what our vision has been since we started this company. I've got 8 seconds left, so not enough time for questions, but please come by booth 217. We'll be here today and tomorrow to answer your questions. Thank you.